Hi, welcome to Neppy Invest. In this video on my series of Appendix 4Cs that have been released in this month, October 2020, I'll be focusing on a company called MedAdvisor. Their ticker code's MDR on the ASX. And as you could probably tell, they are a healthcare company. And what they do is they have a medication management platform which helps patients to monitor or manage their own medication. So let's get straight into it and see what their quarterly cash flow report was like for this month or this quarter. So they have receipts from customers of $3.5 million. So that in itself doesn't mean anything to me. I like to see a trend. So I like to see what they've been doing or how that relates to previous quarters. And down the bottom there, we do see they are burning cash in operations to the tune of $1.6 million. So that's a bit of a cross there. So for disclosure purposes, I'm not a MedAdvisor holder. I have never been a MedAdvisor holder. There's just simply on my watch list. And what I'm looking for is that cash flow from operations to come down a bit, those receipts to go up, which they are starting to go up. And there is maybe some signs they might be starting to sort of hitting an inflection point where those receipts start to really explode in the next few quarters or the next few years at least. And I'll get to that reason in a second. So most important thing is when I look at receipts, I see the trend. And what I want to see here is a good solid uptrend. And we definitely see that with MedAdvisor here. Cash receipts have gone up from 2016, less than $1 million per quarter, now up to $3.5 million per quarter. And that's a fairly significant increase from July 20. So it's increased by $1.1 million. Whether this is just a one-off or whether their expansion into overseas markets has or is paying off them, it awaits to be seen. So still remains on my watch list, and I just want to see some sort of growth in the next few quarters or the next year at least. So some of the things that didn't attract me to a MedAdvisor, so they do have $11.1 million in cash, which decreases their enterprise value to less than 100 million or close to 100 million anyway. But the second point there is they have launched in USA, UK and Southeast Asia since June. So they're starting to expand overseas, and that's always a good thing. Actually, we shouldn't say that. It can be a good thing if they're able to manage that expansion well. And hopefully, even though they're expanding overseas into these other markets, they are able to keep their costs down enough that that expansion leads to increased margins and increased cash flow. And in the last quarter, they did receive $353,000 in international receipts. So you can see the majority of the receipts is coming from the Australian market. So hopefully that sort of turns in the next few years where the majority of the receipts come from international markets, where you would assume the markets or the market opportunity is much greater than Australia. Chart-wise, nothing too exciting on the chart. So what you like to see in a chart going back a year, so this is a year chart, is a chart that goes from the bottom left to the top right. It's sort of going sideways if you look at it in that year's time. In fact, the last 3 or 4 months, the share price has taken a bit of a turn for the worse, and we are seeing a bit of a short-term downtrend. I think if the price gets to about 30 cents or so, that would be support, and that would be a good buying opportunity if you do want to buy. Once it gets towards the 60 to 65 cents, that would be an opportunity to sell. And I did have a look at the 3 to 4 year chart, and it's just been going sideways for 3 or 4 years. And that's mainly because I don't think I think as soon as they become cash flow positive in operations, that could be sort of the inflection point to see them moving forward with the share price. We are seeing volume back off a bit in the last few months with this price downtrend. So that's not a bad sign. That there's not a lot of selling at all. So it seems like the holders, or the majority of holders, are hanging on for the moment. So that's all I got for this video on MedAdvisor. If you have any questions, leave it in the comment section below. And again, I'm not an advisor, so if you do need professional advice, make sure you seek one. So I hope you've enjoyed this video, and I'll do another video on this series of Appendix 4C reports that are starting to come in. And no doubt in the next 2 or 3 weeks, I'll be doing a lot more since the majority of them have yet to come in. So have a good day, have a good weekend. See ya.